Welcome back to LeonCo, and welcome to this week's video. For this week's video, we want to do something a little different. We wanted to talk and share with you guys about a topic that we've given quite a few videos on it, and on these past few days, we use exactly this presentation to give out a brief seminar about credit and how can you use credit, what is credit, and wanted to share with you guys some useful tips about how can you start creating credit, especially for the young audience, the young people, people that don't have a great idea on how credit works. We want to share with you guys lots of good ideas and lots of facts that can help you on this credit journey. So first of all, we want to share with you guys what exactly is credit. Well, in simple terms, credit is your capability or your ability for you to repay future services and or things that you want to acquire. It's the ability for you to repay an institution. It's your ability to repay an individual or institution, and that you will have that payment, that you will do those payments in a set amount or a set of circumstances that you as an individual and the institution or a mediator have established. So credit is, in simple terms, credit is your ability to repay off debt, a future debt that you acquired from lending a certain amount of money for you to acquire some goods or some services. That is credit in simple terms. So credit is not something very complicated. It's something very simple, very straightforward. And when we talk about credit, we usually think about credit cards. As you see in the images, we believe quickly the first image that comes into our mind is that when we think about credit, we think about credit cards, and there's many different types of ways that you can have credit, depending on the type of credit that you want, the amount of credit that you have. But for us simple people, working people, for individuals, the best way to see or to visualize credit is with credit cards and with an institution. So when we talk about credit, we like to talk and we discuss, and many people talk about, what's your credit score, or how can I improve my credit score? What is a credit score per se? And credit scores is that punctuation, that score that give out credit institutions on the way or the probability that you will be successful on making future payments on money that you have borrowed for those goods and services. But how do they establish a credit score? Well, here we are showing to you how a credit score is giving out. The big chunk of percentage, that 35% of that credit score, is based on your payment history, on payments that you've made in the past. This could be any type of payments. This could be credit card payments, car payments, mortgage payments, loan payments, student loan payments. This could even include your utilities, your cell phone payments, any type of payments, any type of history that you can provide to these credit institutions that you have been responsible on your payments. This is a big chunk of your credit score. Then it comes the amount you owe. And this is very important, because when we talk about credit scores and we talk about credit, you want to be able to have the capability to pay the things that you owe. If you have a big chunk of credit debt, this will affect your credit score in a very negative way. So one of the basic things when you want to improve your credit is try to pay out as much as you can from the amount of credit that you owe, because between your credit history and the amount you owe is 65% of what they take into account when it comes to giving you out a credit score. Then it comes to the length of your credit history. Keep in mind, if you have not a big credit history, the probability of your credit score being high could fluctuate depending on the amount of credit line that you have. But as time goes on, your credit score is bound to go up if you're responsible with your credit payments and you have a good credit history. Then it comes with new credit openings and type of credit. When the new credit opened is the amount of times that you acquire, could be a loan, could be a new credit card, it could be a loan for a car, it could be a mortgage. The amount of loans or credit openings that you have will affect, both in a positive or a negative way, your credit score. And finally, the type of credits. And that's what I've mentioned before. This could be of a loan, a credit card, or so on and so forth. So keeping these all in mind is something very important, because when we talk about a credit score, most people don't know how it comes to fruition, and that credit score. And this is a great way for you to visualize how your credit score is met. So when we talk about credit scores, we talk about what is a good credit score, what's a bad credit score. So credit scores go from 300 points to 850. So if you're in the margin from 300 to 629, that is a bad credit score. You want to try as hard as possible not to fall into that category. You want to be heading into the high 600s and into the 700 marks. For most people, they believe that as long as you have an 800 mark credit score, the high 700s, you will have a good credit score and you'll be off good in the future. But in reality, we all want to be in that grade, into that excellent credit score from 720 to 850, but try to strive into more of those 800 marks. That is where you want to be in a credit line, so you have good credit, it's visual, so you can have the opportunity and have the capability that in some future, if you want to get a loan, if you want to have a good credit line, if you want to add on to your credit line, this could be a good marker for you to have that opportunity to do so. So for you guys that are starting in your credit journey or want to improve your credit journey, here are some good tips that you can have so that you can improve or start building your credit. And one of the great things that you can do, especially if you know people, and this part is very important, if you know people that have good credit, they are very responsible with their payments, especially family members. If you're a young person, if you're just starting college or going to college, if you don't have credit history and maybe your brother, your sister, maybe your parents, maybe an aunt, uncle, or grandfather has a good credit score, ask them to put you in one of their credit lines as an authorized person. If you are an authorized person, you will take advantage of their credit history and their credit score. So you will be building up your credit history and have a credit score thanks to them, because since they have already a credit history, they have a good credit score, you will benefit from that. But keep in mind that this goes both ways. You can affect them and they can affect you, because if in some point that person has trouble paying off their credit or paying off their debt and their credit score is affected and their credit is affected in a negative way, so will you. And that goes both ways. If you affect them in a negative way, they will be affected. So keep that in mind. This is a great option for young people. If you're a parent and you want to help your children build up some credit, or if you're just a young individual, you're starting college, you're in high school, and you want to have that opportunity to start building credit, talk with one of your parents, talk with a responsible adult. And that's very important because you want to talk to a person that has a good credit score, because if you talk to a person that has a bad credit score, that will reflect on you as well. The next great tip is handing out loans. There are different type of loans that you can use to build up or improve your credit. You can have a regular loan, or you can have a secure loan. In our experience, we had a situation with one of our members here that they had some trouble with their credit, and they wanted to build up their credit again and have a better score. And we talked for some people, we talked some institutions, and one of the best advice that they gave us is handing out a secured loan. And the way that a secure loans work is that you are you're giving yourself a loan, you're borrowing money from yourself, and you repay yourself a certain amount of money depending on the type of loan that you gave, depending on the amount of money that you gave yourself in a loan. And this is a great way for you to build up or rebuild your credit, because you're not asking for another institution or asking someone else for money. You're just borrowing money from yourself, and this could be a great opportunity for you to build up that credit score or to help you fix that credit score. The next is having a secured credit card or just having a regular credit card. Most of us know how credit cards work. We're familiar with the credit card system, but not all of us know that there's such an opportunity as a secured credit card. And just as secured loans, secured credit cards work practically almost the same. It's a credit card based on an amount of money that you're willing to lend yourself, and that amount of money refers to the amount of credit line that you have. For example, if you want to create a secured credit card with a credit line of $2,000, because that's the amount of money that you are willing to put aside, that is the amount of credit line that you have, those $2,000. And the way that it works is that you're borrowing yourself that money, you're lending yourself that money. So the credit line, when you start to pay off that credit, it's just you're paying yourself. So these are great ways for you to build up that credit, to create a credit history, and especially for the young people that don't want necessarily to have that responsibility of having a regular credit card. This could be a great way for you to have that first experience, dip your feet into the water, how credit cards work, get a secured credit card. You don't have to start with lots of money. You can start with $500, maybe $200, and then build your way up. And some institutions, not all institutions offer them, but the ones that do tend to, if you have a good history with that secured credit card, they tend to offer you a regular credit card from that institution. So this is a great way for you to get that experience or just to build up that credit score that you have. Well, based on that, we want to conclude this video with some good tips that you can use, or some tips that we use in our credit lines and with credit cards. And that is that take advantage as much as possible of having credit. View the credit line or view credit cards as an opportunity for you to add value to yourself. This is very important. Many people or some of us believe that credit cards could be a burden or it's something scary that you don't want to expose yourself to that. But the reality is that if you use them responsibly, if you use them smart, it's a great opportunity for you to add value to your day-to-day habits of spending. For example, if you're a person that travels a lot because of work, or you're a person that just likes to travel because of passion, because they like Try to find a credit card that gives you flying points, American Airlines, JetBlue, or any other airline that you can exchange that credit that you use into points that later you can use on travel. If you're a person that has lots of businesses that always has that money in hand to pay for utilities, to pay for employees, to pay for all those things, a credit card with cashback could be a great option for you, because if you already have the money to pay the bills, and with the cash you use that credit line, and then in a couple of days you pay off that credit, you get that cash back. So basically you will be getting paid to pay your bills, to pay your utilities, to pay for those expenses. You can do that if you have a business, but you can do that if you're an individual. You can use your credit card that has cash back to pay for utilities in your house, to maybe pay for different types of things that you use, for groceries, for going out on dinner dates. And if you already have that money budgeted in your budget, you just pay it off in a couple of days, and then you will be eventually getting paid to use that credit line. That's a great tip that we learn and we share with lots of people that have the money in hand and want to get what we say a quote-unquote an additional income by using their credit. Another tip is that we use this. This is our daily habit. We use this very responsibly, very strict, and that is every time you use your credit card or you use a credit, pay it. Pay it in a couple of days. Don't wait for it to pass the month. Don't wait for it to get interest. Pay it quickly. If you wait for those things to snowball and get big, on the long run, you'll be piling up debt and you'll be piling up interest, and that's what you don't want to do. You want to use those credit cards, you want to use those credit lines in your advantage. And finally, the final tip that we want to share with you guys is that if you have a credit line, use it. Don't be scared to use it. If you know you're going to have money in the future, let's say you just went out with your significant other, with your friends, you just went out by yourself, you wanted to have a good time, but you don't have the money right in hand, but you know in a couple of days when you're checked from your job or when you get some couple of bucks, you'll have them in a few couple of days. Use your credit line. Enjoy yourself. Don't look at it as something that's scary. Don't look at it as something that you never want to use. Take advantage of it, because in the long run, the more you use your credit, the more you build up that credit history, the more you're responsible with it, the better off you'll be, the better credit score you'll have. So we wanted to share with you guys this video sharing about our thoughts about credit. We hope that you guys learned something, that this information is valuable or useful for you guys. But most importantly, that you guys stay safe, stay healthy, and always remember to have that king mentality.